The Reserve Bank of India's larger than expected 50 basis points rate cut and liquidity boost through a 100 basis points cut in cash reserve ratio weighs on the rupee's outlook. The RBI's rate actions hint at growing conviction within the Monetary Policy Committee that lower inflation is likely to persist and that GDP growth remains on a weaker trajectory. By front-loading rate cuts, the RBI seems keen to ensure the benefits of lower rates reach the economy. There's also plenty of liquidity to keep things moving. The RBI signaled a pause for now, but not the end of rate cuts. The rupee held steady after an initial drop on expectations that the central bank has front-loaded its easing, limiting further easing, and the RBI eased the policy rates and liquidity but made no promises for the future in complex messaging. That whipsawed domestic financial markets somewhat. Stocks rallied while bond yields experienced a roller coaster ride. What really caught markets off guard was the RBI's decision to shift its policy stance from accommodative to neutral. That is a notable reversal just 2 months after the central bank had adopted an accommodative stance. That's a pretty quick U-turn, and it suggests that the central bank might be done with rate cuts for now. It feels a bit counterintuitive, especially since inflation has been running below the RBI's target. The RBI is signaling a pause, but it's leaving the door open for more easing if growth or inflation weakens further. And for more on this, we're now being joined by Amit Pawari, founder and MD of CR Forex, live from Mumbai. Thank you so much for joining us on World Business Watch.
Pleasure is mine. Thank you.
Now, what's your outlook for the rupee after the RBI's jumbo rate cut?
I think RBI played a masterstroke by going full-fledged and cutting 50 basis rate points. When we started our career as an analyst, we were observing that RBI monetary policy is more determined by seeing what US or other major economy will do. But this time we have seen a divergence. US is not sure whether they are going to cut rate or not, but India had done that. By doing that, what has happened, interest rate differential between two currencies has narrowed a bit, which can, in the short term, can pressure on the bond market, and because of which we may see some outflow, and rupee will have a pressure and can move towards 85, 80 or 86 kind of levels in the short term.
Right, and what's your take on RBI's change in stance to neutral from accommodative?
I think that is more a balanced approach that will give the RBI more flexibility to decide whether to cut, whether to pause, whether to increase, as we are seeing that global uncertainty persists because of tariffs. I think that's a good step, keeping doors open on all the sides.
Right, and of course, just to expand on that, what does the latest policy move mean for foreign investors?
I think RBI cutting 50 basis rate cut and CRR by 100 basis points is giving a clear indication that RBI is pro-growth, RBI is pro-liquidity, and in the medium to long term, we are expecting that FIIs will come back to India and invest in equity markets. In the short term, bond market may see some kind of an outflow, but in a medium to long term aspect, we are expecting flows to come into the Indian equity market, because of which we are not expecting rupee to depreciate beyond 86.50 kind of level.
All right. Also, thank you so much for joining us on World Business Watch with your insights on this. It's been a pleasure speaking to you.
Same here. Thank you.
For latest news, download the WION app and subscribe to our YouTube channel.